Please welcome CEO at Brookfield, Bruce Flatt, Chairman and CEO at Global Infrastructure Partners, Adebayo Ogunlesi, and Managing Director and CEO of Macquarie Group, Shemara Wikramanayake, for a conversation with Chief Correspondent, Bloomberg Originals, host and executive producer of The Deal, Jason Kelly.
All right, well, I'm back again. Thank you for indulging me. This is where I have to, do some real work and not just talk about sports for a living, and go back to the days when I covered Wall Street. And to that end, it's fascinating to sit here with these three global investors who really, in many ways, have helped invent this asset class. The hundreds of billions of dollars, the trillions they have, among them, are some of the most influential dollars around the world, and at a time where infrastructure is a critical piece of the capital markets. Shemara, I want to start with you on that exact note, which is this is an asset class in a way that it wasn't when all of you guys got into business a couple decades ago doing this.
Yeah, definitely. And I'm glad to see you paying attention to what Bio told you of asking Bruce the first question. Defiant as ever. But we're going back, I guess, about 3.5 decades when infrastructure evolved as an asset class. And it started really in Australia back in the day, where a state government had got into financial difficulty and to pay off debt, privatised a lot of utility-type assets. And we just had compulsory pensions come in Australia. And I guess partly we were looking for a client, but also it made sense to us that the most logical owner of these long-duration, capital-protected, yielding-style assets were the savings of the retirees. And so we put together funds, together with others in Australia, to buy these assets, and then we had to build operating expertise to manage the assets. And gradually it's grown now into a lot of other regions, into a lot of other sectors, from utilities into transport, into communications. Digital infrastructure is a big thing today. But I still think we're, even though the three of us, we were saying, have probably been in this for 3.5 decades and were there before anyone else, it's grown into a bigger asset class now where there are a lot of variety of providers, which is great for communities and investors. Despite that, I think it's still very early stage, and I'll let the others speak.
Is that do you agree, Bio? It's fairly early stage in terms of the opportunity for infrastructure investment?
Oh, absolutely. First, I have to give credit to Shemara. Macquarie actually invented infrastructure as an asset class, so thank you for doing that. But when we started at GIP, 20 years ago, I think there was $50 billion that was managed by infrastructure managers. Today, it's about over $1 trillion. But I still think we're at the beginning of the golden age of infrastructure, private capital infrastructure. Think about all the big macro trends: digitalization, energy transition, energy security, infrastructure renewal. These are all going to require very large amounts of capital at a time where public sources are constrained. So the only realistic alternative is private capital. And every government you meet with is talking about how do we stimulate growth. And investment in infrastructure is clearly an area where you can do that.
Right. And so, Bruce, pick up on exactly that, and the digitalization piece, especially. Ruth Port was on stage, talking about the AI opportunity and what that's going to take from an infrastructure perspective. Tell me how you're essentially answering that call and how massive that call is.
So the first thing I'd say is, and what's really important is, 50% of the things that we invest into today in $1.2 trillion of stuff didn't exist as an investment asset class 20 years ago. 50%. And what that means is the whole backbone of the economy, it's the same, but it changes all the time. And Ruth referred to earlier the AI build-out, and she said it's about power. But I don't think what she didn't say is that the real problem we have is that we can't build the power fast enough. You need to find the land, you need to connect it to the grid, you need to build the power, you need to build the data centers, you need to put the compute inside. And this is an enormous effort to build the backbone out for artificial intelligence. Like we were surviving with building for cloud and for regular power, but everything is electrifying in the world generally. And second, artificial intelligence is only, we're not even in the first inning. And therefore, the build out for that, the big impediment is not chips, it's not models, it's power and data centers. And like what we're talking about is $5 to $10 trillion. Like these are sums that have never been invested before.
Right.
Like this is the railways, the roadways that we built out in the 50 years ago, 50 and 100 years ago, and that's really what's going on. But it's going to arm business, and it's led by the U.S. today, but it's going global in every single country because it's going to be table stakes for business in the world. Like that's what we're going to have to just underline the backbone of what's going on in the world today, and that's the real challenge for us.
And so, Shemara, how difficult is it to meet that challenge? I mean, are you able to sort of amass the capital that you need to get there, and where does that capital come from?
Yeah, well, I mean, I think Bayo and Bruce were talking about on the asset side, a huge amount of capital being needed, so big opportunities for investment. But equally, on the investor side, there are massive pools of savings in the world that are still underallocated to this asset class.
Okay.
And I'm not just talking about institutional money. We've got a few $100 trillion of money out there that has very low exposure to this asset class, which logically fits with a lot of the liability profile of the people who are managing these pools. And it's not just the institutional money, but in the US here, more than half the wealth is in private capital through either private wealth or 401ks. They're talking about giving access to more of these asset classes, the private markets, illiquid asset classes. And as I said at the beginning, it fits well with these liability profiles. Countries like Canada and Australia, some of the pension funds have 15% allocations to infrastructure. Here it's 1 or 2%. So I think both for the communities that need the capital and not just the evolving needs Bruce just talked about, but even conventional infrastructure here in the US, a lot of the roads and utilities are owned at local and state government, airports as well. And there's scope when they have all this debt to bring private capital to invest in that from the community point of view, but also from the investor's point of view. I think it's an asset class where it makes sense for the holders of those pools of capital to allocate more. So that's why I think it's a great thing that so many other managers are coming into the asset space. There is diversification and the scale is going to grow on both sides.
And so, Bayo, how would you describe the investor appetite side, and where is it coming from sort of by category? Is it the sovereigns? Is it the pensions? Is it the endowments? Is it all of the above?
Look, it's all of the above. I mean, you think about it. What is there not to like about an asset class that gives you steady yield, is uncorrelated to other asset classes, gives you capital appreciation, gives you inflation protection? If anybody here manages money and you're not in infrastructure, you're doing something wrong, okay? And because, look, it is a very attractive asset class, okay? And the need is there. There's something called the American Society of Civil Engineers. Every 2 years, they publish an infrastructure report card for the US. I encourage you to go look at it. If your child showed up at home with a report card that looked like that, you'd take away their iPad, their iPhone, you'd stop them from watching television. I think the highest grade was a B-. Everything else was a C+ or a D, right? So, there's talk about digitization, there's talk about energy transition, but even refurbishment of basic infrastructure in the US, in Europe, in other countries, creates a tremendous amount of demand. So you talk to most institutions, they'll either tell you that infrastructure is the number one asset class. I think it's either infrastructure or private credit. Those are the top two. And so I think the demand is there. And the key is creating investable opportunities for the asset class.
And so to that end, Bruce, what are the most investable opportunities? Because there is a limited amount of time and money and space that you have to do this. So if you had to pick one or two areas of the world or types of projects you're most excited about, what would they be?
So in every single country of the world, not power, I'm generalizing, power has been flat for 20 years, power usage. So there were improvements in power was getting built, but the usage was basically flat for 20 years. In 15 years from now, every single grid in the world is going to double. Double. It was flat for 20 years. So the opportunities in building power are endless, and if you know how to do it, the opportunities are very significant. That's number one. Number two is, I'll call it data centers, but really computational intelligence. Building compute capacity for hyperscalers, governments, because the use of governments using sovereign AI and hyperscalers needing it for computational capacity to feed small, medium, and large-sized business is almost endless. And I say endless. The point is, we can't, everyone's interested in it, to Bio's points. He made 5 points, and every one of them is 100% true. Everyone's interested in it. The real thing is, who is skilled enough to be able to build it? And that's actually the real thing. Like, we've been in this a long time. Everyone, when there's a sector like this, and it's all the traits that he just mentioned, and lots of money and lots of opportunity, and it's the sexiest thing in the world to do, everyone's interested in it.
Right.
The question is, can you do it?
Right.
And that's the difference is going to be here is those that are skilled in building things and doing this type of activity, and the mistakes will be made here with the people that don't really know what they're doing.
And so, Bio, how do you ensure that you have the right people? You've been doing this for a long time, and you've done every type of infrastructure project under the sun, but they don't all call for the same skills of people, the same managers. How do you find those people, and how drastically has that changed as you've evolved what you're trying to do?
Yeah, look, I think one of the keys that people sometimes overlook, don't pay attention to, is actually how you manage these assets, right? Think about most infrastructure assets. They tend to be monopolies, right? I mean, nobody's ever going to build another airport in New York, okay? There may be a third runway at Heathrow. We just got approval from the UK government to build a second runway at Gatwick. But they're monopolies. And what are monopolies? They tend to be lazy and not particularly well managed. And so one of the things that we focused on is, how do you get infrastructure businesses to think about customer service? We had an infrastructure company. Do you know what they call their customers? They didn't call them customers. They didn't call them clients. They didn't even call them accounts. They called them debtors. When you call your customer a debtor, are you really going to focus on customer service? So you change that mentality. People often ask me, aren't you worried about the fact that you own airports and, these are strategic assets and governments will come and interfere? I said, no. The thing you have to focus on is you provide quality service at affordable prices. People will leave you alone. Provide lousy service at bad prices, of course the government will interrupt.
Right.
So I think focusing on how to manage these companies and provide good customer service, be efficient in how you run our operations, have capital discipline, we think that makes a huge difference in success.
Shemara, one thing I want to make sure we talk about is, geopolitically, the world is quite turbulent, I think it's fair to say, in polite company. Energy security is a huge issue, concern for a lot of people. How does that figure into both your investment thesis, but maybe to Bio's point, how you manage assets?
And look, I think there's a spectrum of managers in this asset class, like all of them. Like Bruce has been in real estate for ages. There are core plus, opportunistic, value add. I think all three of us are very active managers of infrastructure. So we come in early stage and we try and offer the beta plus a meaningful amount of alpha through active management. But there are also themes playing out, and we specialize in certain themes. I think what is happening, I heard David Lammy talk about globalization. I think what's happening at the moment is a level of deglobalization is being driven, where lots of other regions are waking up to the fact that they need to be self-reliant, from energy security, defense, a whole bunch of things. Supply chains are moving in terms of trade. That creates real opportunity for infrastructure investors like us. It's challenge, but also opportunity. And I think energy security is definitely one of those areas where there's a lot of opportunity to invest. I think Europe feels very exposed because of the exposure to Russia and sources of fuel from there, so they're looking to build security. The Asian continent is growing a lot in energy demand and needs to have security. So it's one of the many themes in which we're investing, and we focus a lot on deep expertise. Also, new forms of energy are needed because solar and wind, which have grown to scale, are very intermittent, and we need firming baseload solutions. So we've just raised a $3 billion energy transition fund where we're focusing a lot on things like battery storage. But we hire people with deep expertise in each of these multiple subsectors to deliver alpha.
All right, we only have about a minute left, so Bayo and Bruce, I'm going to give you two the last couple words. What are the things that could get in the way of this very fast-growing asset class at this moment, Bayo?
Look, the biggest obstacle is regulation, right? You know, it shouldn't take 10 years to get permission to build a transmission line in the US or in Europe, okay? And I think one of the things that the administration is doing right, we're hearing the right noises from the European Commission, although we haven't seen a lot of action, but we're hearing right noises, is streamlining the process for getting these things built. And if that doesn't change, you know, the challenge that Bruce identified, which is how are we going to build all this power generation? How are we going to upgrade the transmission system that's going to support the construction of data centers, which mostly are for actually cloud migrations today. It's not really a lot, most of it is not actually for artificial intelligence. I think that's the biggest obstacle, regulation.
Bruce, last word to you.
Look, I think this asset class, it's from 20 years ago, it was 0 in institutional accounts. Today it's 15. It's going to go to 30. And retail wealth accounts, individuals, it's 0. And it's going to go to 20 or more. We've got 25 years runway of an enormous build out, and it's purely because these are excellent assets to own in long-tailed accounts that have downside protection and earn reasonable returns. And the success of wealth building is compound reasonable return over very long periods of time, and that's what infrastructure can do for you.
Well, great to spend some time with the three of you guys who invented all this, and you're still doing it. So thank you very much.
Thank you.
Really appreciate it.